Daily Forex, this is Chris taking a look at Bitcoin. Bitcoin has fallen pretty significantly during the trading session here on Thursday as traders continue to see the $100,000 level as important. The $100,000 level is an area that previously had been tested as both support and resistance. Now we find ourselves getting closer to it, and I think we have to watch whether or not the $100,000 level breaks down. That opens up the possibility of a move down to the $92,000 level. Ultimately, this is a market that could drop to $80,000 if this keeps up, but as things stand right now, we still see the support. So we need to get through that $100,000 level to truly break down. Short term rallies at this point in time, we'll have to watch the crucial $108,000 level, which is an area that previously had been support and resistance. So if we can get above that, then I think we've got an opportunity to go much higher. Keep in mind that's the 200-day EMA as well, so that also comes into the picture. Anything above there opens up a move to $116,000, but I think it's going to take a lot for that to happen. Ultimately, this is a market that looks more negative than anything else. Best case scenario, we just hang around above $100,000 and just work off some of the froth. Ultimately, what's interesting is that the overall online debate right now is that crypto is somehow being manipulated and it's falling apart. But the reality is it's not that massive of a drop. And it really hasn't been that disorderly. I think a lot of people out there are over levered to Bitcoin. Again, a breakdown below the $100,000 level leaves another $8,000 drop, I think. A break above $108,000 could be a significant turnaround just waiting to happen. But right now, there's no real reason to think that Bitcoin's going to catch a huge bid. So sideways or lower, more likely than not, ends up being where we go next. It is an institutional asset, and it's worth noting that a couple of the bigger institutions, I keep seeing BlackRock's name being mentioned as being big sellers. If that is in fact the case, welcome to Wall Street, crypto kids. This is how it works in a regulated market. We'll just have to wait and see. Sideways wouldn't be the worst thing. Build up a little bit of confidence. But the days of the 15% straight up in the air moves, I think, are probably for the most part over or getting close to being over. After all, institutions don't like the idea of dealing with assets that volatile. And then again, you have to ask a serious question. What's it being used for? It seems to change every year or two. There will be another thing coming along sooner or later. But right now, I don't even think most people can answer that question. The 50-day EMA dropping below the 200-day EMA would kick off the so-called death cross. That obviously is important for longer-term traders to pay attention to. We'll just have to see how that plays out.